All right, good morning, guys. Happy Monday, June 30th. Month end, quarter end, all of the ends. And then we, of course, have a short week with a half day on Thursday, and the market is closed on Friday. So, that being said, I'm going to go to the beach for a few days. But all right, guys, I think we are good on audio. New beginnings, of course. But all right, guys. Don't think you need me to tell you this, but it's been a pretty strong market here. Decently strong. QQQ with a brand new all-time high on Friday of 549.99. So they couldn't quite get the big 550, but if you look at the pre-market bid and ask here, looking like 551. So the push may continue, and then the S&Ps, right, not to be outdone, they get up into 61.87. In more of a bigger picture view, but if you pull up the weekly, for the first time since the December 30th candle, we do have a big 3 buy signal here on the weekly. 15 points out of 15, really good trend, really good structure. I think more important than good trend and good structure would be that momentum cross. So if you guys look down here at the MACD bars, there was a negative cross back in January. We had the dump. We had the great bear market of February 2025. And we bottomed. We rebuilt the structure back above the 50, back above your 21. I think the best thing is that fresh momentum cross. They kick off the bear cycle, get the flush, they pop it. Taking that positive cross with really good trend and really good structure, it's kind of like the bulls are pulling out of the garage, and they've got a fresh tank of gas. Doesn't mean we keep on going higher in a straight line. Again, more of a bigger picture conversation. At some point down the road, price will have to come back to that weekly 21. Not calling for it today, this week, next week, but it will have to happen at some point. And I think when you finally get that flush, S&P's back to a weekly 21, QQQ back to a weekly 21, your NVIDIAs, your Metas, your Microsofts. If you get through that pullback and you still have really good trend, really good structure, could make for a great buying opportunity. But the bulls have won themselves a fresh weekly buy, and then for the Big 10 basket, which is these guys right here, the Apples, the Netflixes, NVIDIA, Microsoft, Meta, Tesla, Amazon, Broadcom, TSM, Google. Throw them into a weighted basket. And the weekly chart here for the Big 10, a little bit like the S&Ps. You had a bear cycle, and they pull it back, they dump it, they pop it. You've got better structure, better trend, momentum crosses, and a fresh tank of gas. So everything looking pretty good there. And then if we jump to the spreadsheet, it paints a picture of a very bullish market. No surprise there. Let's see. Indexes are at 86% of their best possible score. The Big 10 basket is at 74%, and the sectors are at 48%. Here's communications, really strong. Big 10. You got the industrials, financials, the semiconductors, XLY, XLK, utilities, Bitcoin, transports, ARC, and the materials. Then you got your gold, your silver, your biotech, a little bit more neutral. Energies kind of sloppy, XLP, healthcare. Typical cast of characters. And then for the Big 10, Apple's not great. Negative 17 is ever going to be great. But I think if you look back 2, maybe 3 weeks ago, Apple had like a negative 70. So it's like, your first quarter, the kid brings home an F plus on his report card. And then for the second quarter, he brings home a D plus. It ain't great, but we're going in the right direction. Tesla's very neutral, and then till things change, I think the others are all fair game here. You buy them on a pullback to an hourly 21 EMA, buy them on a pullback to a daily 21 EMA, buy them on 15-minute squeezes, 30-minute hourly. But Google's pretty sharp here. Here's Microsoft, Amazon, Broadcom, NVIDIA, TSM, Meta, and the Netflix. Now, the only thing here, I'm not going to call it a red flag. I think it's more context. If we jump to the master list tab, And I think we have like 202 names here. 198 names. So out of 198, if we look at their total scores, right now we have 73 names printing a score of 70% or better. So in plain English, you got 73 names that are really bullish. From a weekly chart down to a 2-day time frame, a daily time frame, an hourly of 30. So if we take all those guys, put them on a watch list here, which I have over here. All right, so there's all those stocks. And then this column right here measures your average true range above your 21 EMA. In this case, the daily 21. And I think a good rule of thumb, if you're buying a pullback, you're buying a squeeze, a really good entry is anything from, call it 1.25 ATR or lower. Above that 21 period EMA, that's a great entry. And a good entry would be you're maybe buying it at about 1.5. I think when you get long anything above that 1.5 ATR, it's your risk reward gets a little bit negatively skewed. All right, so that being said, if we sort by the ATR column, right now there's only, let me see, there's 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of about 75, there's only about 10 names that are actually setting up near that daily buy zone. Then you go look at the other end. Here's Goldman Sachs, 4.2 ATR above your 21. NVIDIA's clocking at 3.9. You got TSM 3.5, Morgan Stanley 3.3, Dash 3.2, Netflix 3.2. The SMH is 3 ATR above it. Meta's at +3, JPM at +3. Here's Microsoft 2.6, S&P's 2.9, QQQ 2.7. Point I'm trying to make is right now these are your strongest names on the board. They're your strongest, but they're also the most overbought. So if we go look at, say, NVIDIA, the beast formerly known as NVIDIA, from an indicator standpoint, you got to like everything about it. Full 15 points on the checklist, all the trend, all of the momentum, the structure, buy signals, all of the beautiful things. But from a really good risk reward point of view, talking about swing trading, not so much day trading. From a swing trade point of view, if I jump in here today, buy NVIDIA calls at 158, and I do that because I like the buy signal, I like the structure of the chart, I like all the pretty colors here. If I like that at 158, 160, none of that will change back at 155. None of it would change it back down to about 150. None of it would really change back to about 145. And to be clear, I'm not calling for a pullback to the 21 EMA. There's no 15-minute sell signals, no 30-minute, no hourly. But in terms of your risk management as a trader, it's really important context. The opposite would be the trade we had back on Monday, which was Snowflake. Okay, here's a moment in time where you got the squeeze, a white arrow, all the structure things, all the trend, all the bells and whistles. But I'm getting an opportunity to buy it. Not 2.5, not 3, not 4 ATR above that 21, but I'm buying it pretty much right back here at the sweet spot. Right near that 21 EMA, maybe 1.25 ATR above it. Right, I could buy it at 210. I'm wrong at 205. They took the thing to about 225. Make it a bit shorter term. Go look at your 1-hour time frames. And I found for me putting it in terms of putting it in percentage terms is really helpful. So NVIDIA at 158. At 158, you're going to be about. You're about 2% above the hourly 21 EMA. And you've got to understand, a pullback to the rising hourly 21, if you've got 15 points, all the structure, all the trend, there's nothing bearish about it. But I think we've all been there, done that. You buy the 160 calls for a Friday. You buy them for about $3, and then on a totally normal, totally healthy, typical ebb and flow pullback to an hourly 21, the call you bought for $3 is going for about 50 cents. Then factor in this kind of market the options pricing. All right, Nvidia's chilling, and then off she goes. They gap it up, they pump it, they gap it up, they pump it. These calls, the short-term calls, are super jacked up. So the beauty is, hey, if I can catch it on that pullback, dollar for dollar, I'm getting a better entry. But then as far as my options pricing, if you can catch it on a pullback, catch it on even a 15-minute squeeze, a 30-minute, 1-hour squeeze, the premiums can take a little bit of a chill pill. But you really want to keep that in mind. It's been a good couple of weeks. Don't put yourself in a position to give back too much of the good couple of weeks on just a normal kickback to a lower time frame support zone. If we pull up the Microsofts of the world, all right, now a little bit better. That one actually pulled back. And if you're back here buying the 500 call, the 505, the 510, yeah, you don't enjoy anything about that dip. 12 points, great trend, good structure. If they can hold it here, give you a 15-minute buy, give you a 30-minute buy, it's a nice spot to jump in and play for a push. So I think that's the most important thing to keep in mind this week. And again, to be really clear, I'm not calling for a pullback. No part of me is really trying to short this market. But I'm not going to get long in a fashion where we pull back to a 15-minute 21, we pull back to a 30-minute hourly 21. I'm not going to be in a position where I'm giving back all the profits from my Snowflake trade, the profits from the Nvidia trade. Protect thy profit. But all right, few things from last week and a few things for the week ahead here. So as mentioned, we had the Snowflake trade from back on Monday. White arrow on the 1-hour squeeze, white arrow on the 30-minute, 15-minute, and the daily squeeze. So we jumped in, we played the 215 calls and made about a double and change. And then on the Tuesday close, really clean end of day 15-minute squeeze here for Nvidia. all the way back down here. So we bought the 148 call for the Friday expiration. We bought them for $1 and change, caught the gap up, sold them for about $2 and change. And then they went to settle on Friday for about like 10 and change. Left a couple of bucks on the table on that one. And then we had the Palo Alto trade. And for this week, Palo Alto remains on the watch list. But on this bad boy, we bought the 205 calls off of the 1 hour and the 30. The white arrow special. But all right, few things for this week. One would continue to be Palo Alto. There we go. Oh, one more try. All right. Right, so we played the pop from back here. And then on the flush back to support, they do print a brand new daily squeeze. 15 points, the trend, white arrow. So now the key would be, one, can they keep it above that 198-ish? And if they can do that, then two, can we get a trigger to jump in on a fresh 15-minute buy signal, fresh 30, fresh 1 hour? If it's just a really good-looking daily squeeze with a bearish 15-minute, neutral 30, neutral hourly, it'll just keep on being a good-looking daily squeeze. Versus a Snowflake, for example. Daily squeeze, 15-minute buy, 30-minute hourly buy. The gift of the gap. So we are watching the Palo Alto and then crowd here. Some crowd for the crowd. White arrow squeeze on the 4 hour and the daily. Let me go check Spot Gamma real quick. I think they popped the call wall into about 520, but we shall confirm. Can't be giving y'all false call walls. Care about you too much. All right, crowd. What say you? I lied. Even better, 520. That'll do, pig. 520 call wall and a 470 put wall. Yeah, so I was right, 520. Now the question would be, can they take that 4-hour daily squeeze, break them long, and then try to trigger path up towards that 205, 210? Not 205, 210, that 515, 520-ish, excuse me. Let's go look at the 4-hour. So I like it. I like it a lot. And visually, it looks like a huge difference. But if we were to jump in and buy a Delta 70 call, we were to jump in and do a put credit spread, buy in the debit spreads, buy in butterflies, really whatever the case might be. Buying it up here around that 499, 500, it's a good entry. But if you're the guy or the gal buying it back here at 485, 480 back here at 475, I think the trade is like 10 times better. Think about it. You're the guy or the gal buying it back here in the buy zone. They haven't gotten the breakout yet. They haven't fired the squeeze long yet. They haven't actually gotten a close above the 500 level yet. But if you're long from 475, 480, 485, you got a little profit cushion to play with. Your calls are up a bit. The puts you sold are losing premium. You're in a great position now. If they go for the breakout, you're in an even better position. At the same time, though, you're buying it back here. What if crowd has to pull back into 485 one more time before they finally turn the corner and break it out? Well, if I'm the buy buying it up here at if I'm the guy buying it up here at 500, 505, I've got to consider the fact that, hey, this is going to be a beautiful daily squeeze all the way down to about 480. So I can't put myself in a position where I'm long from 505. They kick it back to 480-ish. And I've blown my account. I've given back all my progress for June. I've got emotional distress. Thinking should be, hey, I like it at 500. I'm going to love it at 485. I can buy half up here. I can buy half down here. All those kinds of things. But I like that one. So Palo Alto, crowd, and then the Shopify. Very big pop off the 21 EMA from the Thursday candle. The gap down, the dump, and the 21 pump. Pretty clean. White arrow on the daily is a weekly squeeze setting up here. And then where's our Shopify call wall? We got to know such things. Shopify call wall is 115. Current price is 113 and change. So very clearly a little bit of a roadblock here for now at that 115. That would potentially imply if they can get it and keep it and close it above the 115, they might want that 120-ish off that daily squeeze. And all right, guys, last one here is the one they call the Google. Let me show you the 15-minute candle from Friday. And so it's Friday afternoon. Google's just kind of farting around. Not breaking records, not breaking rules. Just, fade and lower, little pop, little fade. And then a very rapid, very aggressive 4% pop-a-roo off the bottom. I'm not sure the actual news, but good-looking pop indeed. So I think the big to-do here for Google is going to be this monthly squeeze. And I think a great way to look at it, you could be a swing trader, you could be a day trader, you could be a scalper. Your favorite time frame could be a weekly squeeze, a 15-minute, a 5-minute, a 30, a 1. I think we all kind of benefit when a big monthly squeeze breaks out. Whatever your bullish playbook might be, your favorite trade, favorite strategy, favorite setup. If you can catch a moment in time where Google's rallying, 45, 50% higher off a big monthly squeeze, it's a lot of wind at your back. For sake of conversation, say your favorite trade is a 1 hour squeeze. Imagine you're sitting back there as that monthly squeeze breaks out, trying to pick off every hourly squeeze. I'm not saying they all work, but if they're going for a big, bigger picture, bigger time frame release of energy, a lot of them will work. So you could be a day trader, shucking and jiving. You're in, you're out, quick hit and run. I think you greatly benefit from a monthly squeeze. You could be a swing trader. You like buying your 4 hour squeezes, your daily, your weekly. You're going to benefit if a big monthly squeeze fires. You could be more of a buy and hold kind of cat. All right, I'm going to buy shares. I'm going to buy some out the money calls that expire a year down the road. And yeah, for sure, if they take the squeeze, break it out, fire long, take it into the 225 target, you'll definitely benefit. It's just we got to realize this is not a 15-minute squeeze, not a 30-minute, not a daily. Meaning we could be here in December talking about the same exact setup. But then what makes it a little bit more interesting for potential, there is a brand new weekly squeeze, a little bit low compression, and then cocooned beneath that is a 3-day squeeze. Now, the monthly chart looks way better than a weekly or the 3-day. But they could get to a point where you have a white arrow on the monthly chart, a white arrow on the weekly, white arrow on the 3-day. They take the 3-day squeeze, break it out. That triggers a pretty big push. During that push, they go wake up the weekly squeeze. That breaks long. That can give you a bigger push. And as your weekly squeeze fires, they say, hey, we're already in town. We might as well go ahead, wake up the big monthly squeeze. So bigger picture, but I like that. And then shorter term, looking like a gap up into the recent swing highs here. But all right, y'all, we are watching the Google, we are watching the Shop, the Crowd, the Palo, and the Alto. With the major context being a little bit twofold. One, the market's really freaking strong. Like a lot of great structure, a lot of squeezes breaking out, a lot of important things at brand new all-time highs, buy signals, all the beautiful things. But at the same time, the all-stars here, the Michael Jordans, Tom Brady's of the watch list, they're also the furthest above their buy zone. I'm not calling for it, but we could see a situation where Nvidia is pulling back 2, 3, 4%. Goldman Sachs is pulling back 3, 4, 5%. And nothing's changing about the structure of the chart, the indicators, the signals. Things to keep in mind. But all right, folks, any questions for me? Anything y'all want to see what you got? And then folks in my room, folks in the MTT room, I'll be taking you through the open. Got the honor and the privilege. All right, good morning, good morning, good morning, Debbie, good morning, Steve, SoCal, Danny, Mirza, Lorna. Hey, Peter, I'll be up in your neck of the woods next. Not this coming Friday, but next Friday. Got my Vermont trip. I'm going to breathe that sweet mountain air. Good morning, Jace. Hope you have a good week. Good morning, Unique Trading Group. Happy 4th to you guys. All right, RAM, PEGA. The Pegasaurus. What is a Pegasaurus? A dinosaur? A big bird? I kind of like it. I like the pattern behind it a lot. If you trade the squeeze, make sure you don't get too caught up in the squeeze. It's the quality of the current squeeze and the pattern that brought you there. On a giant pullback, a big breakdown, a squeeze at the bottom, it's a lot different than we're trending higher, pulling back, higher high, higher low, and then they give you a squeeze. So in this case, you have 13 points out of 15. No issues with the trend, no issues with the structure. So we call this the slingshot squeeze. They have pulled back on the price, they pull back on momentum, but they maintain a really bullish foundation. 21 above the 50, 21 pointing higher, 50 above your 200. Great structure, stacked EMAs. It's a little bit like you have to sit through a hurricane and your house holds up really good. Momentum goes through a bear cycle. Here comes a heavy wind. Foundation is strong, 21 above the 50. Everything's pretty solid here. So they pull back on price, they pull back on momentum. And then what can happen is kind of like a slingshot. Right? They're pulling back, pulling back, pulling back. If they can then get that positive cross. And keep in mind, guys, on the big three version of the squeeze, these are modified MACD lines. So if you throw a basic default MACD on your chart, in terms of how I look at momentum, you're like 90% of the way there. All right, pull it back, and then the quick cross back above zero can be a little slingshotty. Right, back, and then ripping and a roaring. But what I found is really what's going to seal the deal would be that MACD cross. And then even better, you have a big three buy on the 4-hour time frame, the 2, the 1, and the 30. And that can be helpful. Your daily chart's lacking momentum, but the fact you got a buy signal on the 4-hour, the 2, the 1, and the 30, they're not lacking momentum. So they're kind of calling up to your daily squeeze saying, hey, we're locked and loaded. We got good structure. We got buy signals, good momentum. We're kind of here for a good time. Let's go for it. Yeah, I like that one. Nice. And RAM, at the moment, I have no open trades here in the rooms. Let me grab my spreadsheet for you. So I post trades in my mastery room and then the MTT room. Here we go. So here's a spreadsheet tracking my last 93 trade alerts. Let me grab a share link here. Drop that on the YouTubes. So a few things we had last week were Palo Alto, NVIDIA. God, NVIDIA, $1.35 to $2.40, and they went for about 10. There was Snowflake. We had a dud on NVIDIA the prior week, and then some Coinbase, little JP Morgan, the moving and the grooving. Now, what I think I would love to do would be, I got to let me see. So these are all trades of that white arrow. White arrow, A plus squeeze on a score of 15, which we launched about a year ago. So if I can get 7 more trades under my belt, we'll have 100 finish, and then maybe here in the showcase room, we can put aside an hour, do a bit of a recap. What worked, what didn't work, what was our biggest trade, what was our worst trade. One interesting little stat: our biggest winning streak is 10 trades, which I think was this period back here. We were cooking, baby. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so that was our biggest winning streak, and our biggest losing streak was 3 trades. That happened back here in late July of last year, and then happened in May of this year. There's some pretty interesting stats here, but more on that after another 7 trades. What's up, champ? Larry, KTOS. What's up, Larry? The only thing that would make me like it a little bit more, me being me, what would be a daily squeeze. If it had that, it'd be my favorite setup in the world. Squeeze, score of 15, all the structure, the trend. But we can compensate here with a 4-hour squeeze. 4-hour squeeze, white arrow. But if we like it up here closer to 46, it'll be a really good looking 4-hour squeeze down to about 43 and change. And that's kind of my major focus right now is the quality of the entry, because I really think that dictates your average win, your average loss. The other variable, your win rate, I think we're pretty good on that. The last 3, 4, 5 plus years, this has been pretty consistent for me. This 70, 73-ish% neighborhood. Then the question becomes, all right, well, if I'm taking 100 trades and typically I'm wrong on 30, I'm right on 70, how can I fully maximize that? You could have a 70% win rate and still struggle to move the ball forward. And again, that I think is very much an entry and an exit thing. And the reason I bring that up, when I look at that 4-hour squeeze here for KTOS, I try to think about what will it look like if I buy this, the same exact setup, same exact entry, 100 times in a row. And my major thought here is, all right, if I'm buying it up here at 46, my target's closer to 49, and I'm wrong down under 42.50. All right, yeah, I can make that work over the course of every 25, 50, 100 trades I take, but I'm going to have that good win rate. Flip it to the other extreme. If I could find the white arrow at 43, 43.50, I'm wrong under 42.50, and then my target's a good $4.50 to $5 higher. I don't need a 90, 80, 70% win rate. Now, the goal, the dream, of course, would be to do both. Can I bat about 70% and then my average win, can I make that about 2 times bigger than my average loss? If you can do that, you got a really, really good career ahead of you. But it's just something I'm asking myself more and more. Whether it be a 5-minute squeeze, a 15, a weekly, a monthly, if I buy it at current prices, am I fully comfortable sitting through a pullback at the 21 EMA? And we can get long in a fashion where we're totally fine with that. You put 1% of your account into a 30-day till expiration call. Yeah, that's kind of modest. They pull it back to 45, pull it back to 43. Shouldn't be all that devastating, all that uncomfortable. If I come and put a quarter of my account in the Friday expiration 50 strike calls, yeah, anything other than an immediate move into $50 is going to be incredibly painful. So all those decisions in terms of my position sizing, my time till expiration, am I going to sell some puts? Am I buying a call? Is it in the money? Is it out the money? Things we ask ourselves before pulling the trigger. Because I've done the opposite before. Oh boy, 4-hour squeeze by arrow, and you're kind of getting spazzy, you're foaming at the mouth, you buy your calls. And then you get that pull back into 45, 44, 43. And it's like, man, this is really uncomfortable. I'm down way too much. I don't really feel like sitting through more of a pullback. Thinking should be, hey, if I like the brand new Corvette Z06 at $100,000 off the showroom floor, I would love it. Brand new Z06 at $80,000 off the showroom floor. Same car, same transmission, same body, same engine, same performance. You like it up here, gotta like it back here. But all right, guys, I got a jet here in about a minute. All right, Scott, take 2. On the weekly, Yeah, so here's a great example. What are all the things I like about it right now? What are all the things I think offer me edge? And we can boil it down to the white arrow, of course, but it's a squeeze with all the trend criteria, momentum, structure, everything I'm looking for. So I love all of that. But if I buy it at 240, everything I love about it will be true down to about 220. At 235, you're going to have great trend. At 230, you'll have great structure. At 225, you'll have great momentum. And at 220, you'll have a white arrow. Below 220, yeah, you're moving on to a greener pasture. So now I got to ask myself as a trader, if I buy it up here at 242, am I buying it in a fashion where tomorrow I wake up and Take Two is a $230 stock? Am I angry? Am I devastated? Am I full of anxiety? Or am I thinking, hell yeah, I want to buy a little bit more? And I'm trying to automate this for us with these different shades of green here on the watch list columns. So a bright green A plus, that's an A plus squeeze and a really good entry. So I got to run here, but sake of conversation, let's say I'm going to throw out random numbers here. Let's say your typical position size is 2% of your account. If you find the bright green one, I think you take your 2% right out of the gate. Squeeze all the criteria right at the buy zone. And then one like the XLF here, it's a dark green A plus. All right, what does that mean? It's got everything I'm looking for, but it's a little bit higher than that 1.25 ATR. So I may be on that one take a 1% position. And then, hey, if they gap it up and it becomes a $55 product and I only got half my size, it's a great problem to have. I take a 1% position, they pull it back to 51.50, they hold it. Hey, I'm maybe going to buy the other half now. Palo Alto on the daily chart. If I get my lower time frame trigger, yeah, I can come out swinging here. But all right, guys, I am late for my next session, so sorry, but I got to run. Thank y'all again. Hope you found it helpful. I will talk to you again on Wednesday and try to leave a little bit more time for Q&A then. But thank y'all again. Go get them and talk soon. Adios.